Today, we're going to explore two sides of the very same digital coin. On one side, you've got the corporate world, all buttoned up and fortified against threats. And on the other, a wide-open frontier of pure innovation, crazy volatility, and yeah, massive opportunity. Let's dive in. Think of it like this. The corporate fortress is all about predictability and control. It's a castle with towering walls where everything is defined by structure and procedure. But the second you step outside those walls, you're in the crypto frontier. And that's the Wild West. It's totally unpredictable, it's risky, but it's also where the rules are being rewritten and fortunes are being made. Two completely different mindsets living in one digital reality. So let's start inside the fortress. It just makes sense, right? Because before you can even think about exploring new territories, you have got to secure your home base. And for any business today, that means mastering cyber risk. Now, the absolute bedrock of this defense is what's called a cyber risk assessment. And forget about just having antivirus software for a minute. This is pure strategy. You can think of it like creating this incredibly detailed map of your digital kingdom. You're identifying the crown jewels, you're finding the crumbling walls, and you're figuring out exactly where to post your guards. And this whole process is super methodical. It's this constant cycle of being vigilant. You start by gathering all the data to really understand your infrastructure. Then you prioritize. What are the absolutely critical systems you just can't afford to lose? From there, you're assessing threats, both inside and out, to find the gaps in your armor. You analyze the potential impact if you get hit, and then finally, you build customized defenses to mitigate those risks. It's a loop that honestly never ever ends. But here's a wild fact for you. Where do you think most threats actually come from? We all imagine these shadowy hackers in some distant country, but the data shows that nearly half of all security breaches are inside jobs. Now, sometimes it's a disgruntled employee, sure, but way more often, it's just simple human error. It kind of proves that your biggest vulnerability isn't always in the code. It's the people who use it. Okay, so we have a really clear playbook for playing defense. We get that. But what happens when the whole game changes? What happens when the goal isn't just to protect what you have, but to actually venture out and discover what's next? Well, it's time to leave the fortress behind and head for the frontier. Welcome to the frontier. Out here, one asset just looms larger than everything else: Bitcoin. And they call it digital gold for a reason. It perfectly captures that high-risk, high-reward spirit of this whole new world. And when we talk about high reward, we mean it. Some analysts are actually predicting that Bitcoin's price could rocket past $130,000 by 2026. Numbers like that are exactly what's fueling this digital gold rush, pulling in everyone from individual explorers to massive, massive institutions. So why the comparison to gold? Well, a couple of reasons. Like gold, a lot of people see it as a hedge against inflation. And it has a fixed supply. There will only ever be 21 million Bitcoin, period. But the thing that recently changed the game completely was the approval of spot Bitcoin ETFs. These are basically investment funds that trade on regular stock exchanges, which makes it incredibly easy for mainstream investors and huge institutions to get a piece of the action. All of a sudden, a door just swung wide open for a slice of the world's $130 trillion in managed assets to slow right into the frontier. Okay, so navigating this frontier requires new tools, new signals. And one of the most important ones is something called dominance. You can think of it as a barometer for the entire crypto market's mood, telling you if it's a time for caution or a time for adventure. The concept itself is actually pretty simple. Crypto dominance just measures how much of the entire crypto market's value is packed into a single coin. And usually when we say this, we're talking about Bitcoin's dominance. It's just a percentage, but man, it tells a powerful story about what's going on in investors' heads. And this chart right here, it illustrates the current state of play perfectly. Bitcoin is the undisputed heavyweight champion, holding over half of the entire market's value. Ethereum is a strong number 2. And then you have literally thousands of other projects, we call them altcoins, making up the rest. It's the shifting balance between these slices that we're all watching. So here's how you read the signal. This is the key. When Bitcoin's dominance is high, it means investors are getting nervous. They're pulling money out of the riskier projects and moving it into the big established market leader. It's a classic flight to safety. But when dominance starts to fall, that signals confidence. Money starts flowing out of Bitcoin and into smaller, more speculative projects, kicking off what everyone gets excited about, an altcoin season. And speaking of altcoins, this is where the frontier gets truly, truly exciting. I mean, beyond Bitcoin, there's this whole universe of experimentation and innovation happening, all trying to build the financial systems and the applications of the future. A lot of this innovation is happening on what are called layer 2s. So think of a main blockchain like Ethereum as a really busy highway. It's super secure, but man, it can get really slow and expensive during rush hour. Layer 2s are like express lanes that are built right on top of that highway. They process transactions way faster and way cheaper, which makes all sorts of new applications possible. And the things being built on this new infrastructure are just incredible. You've got these scaling solutions making everything faster. You have decentralized exchanges that let you trade assets without needing a bank or a broker. There are platforms that let you borrow and lend money directly to other people. And there's a huge movement to bring real-world assets like corporate bonds onto the blockchain. This right here, this is the innovation engine of the frontier. So we have the fortified, defensive world of the corporate fortress on one side and the chaotic, opportunity-rich world of the crypto frontier on the other. How in the world do we reconcile these two?
To understand the why behind the frontier, you really have to look at the philosophy that's driving it. And this quote, it gets right to the heart of it. For a lot of the builders in this space, it's not just about cool tech or making a quick buck. It's a genuine attempt to create brand new systems that are more open, more fair, more equitable. It's a really ambitious, almost utopian vision for the future.
And you know what? This brings us to the ultimate takeaway. Because whether you're building walls to protect a fortress or you're drawing maps to explore a new frontier, the core principles are exactly the same. Understand the landscape, assess the risk, and make informed decisions. The tools might change, the environment might change, but that core strategy, it stays the same. Look, the digital world is evolving at a breathtaking pace, and it's constantly pulling us between the safety of the fortress and the allure of the frontier. The real challenge isn't about choosing one over the other. It's learning how to live in both. So the real question is, how will you navigate it? Are you going to build higher walls? Or are you going to venture out and see what's over the horizon? Thanks for watching.